I'm Ned McCrory. I'm the partner in charge of our private club practice at PKF O'Connor Davies.
Hi, my name is Carrie Rockcliffe. I'm a senior manager here in the private club practice, and I've been with the firm for 15 years working with private clubs.
We have a wealth of knowledge with all the clubs that we deal with. One of the things that is common with all of the clubs that we deal with is their not lack of understanding of basic tax issues for private clubs, but just not having enough of it. And Carrie, you want to talk about that with the
Yes, one of the main
checklist?
things that we see that clubs struggle with is the private clubs do have to maintain their tax-exempt status. They do have a percentage of non-member revenue that they have to, a threshold that they have to keep under. So they can't have more than 15% of their total revenue in non-member income. So one of the things we do for our clients is we track those calculations on an annual basis, so we can go in board meetings and have conversations with them and kind of give them some ideas or ways to keep that percentage down.
Is it that easy to calculate it as non-member revenue over total revenue of the club?
Good question, Ed. So it's basically, it's total revenue. We back out initiation fees, capital assessments. So we take that total revenue and we take their total unrelated business income.
You mentioned outside functions, and my experience has been, I'll ask you if you agree, that the controllers at a lot of clubs don't understand the definition of non-member revenue when it comes to a function.
That's absolutely correct. And one of the things we do have is the IRS put out a Form 7117, which we try to have every club controller fill out that form after every event, which is a checklist that goes through the event and whether that event should be member or non-member income. And we are finding that a lot of times either the club controllers don't know that checklists exist, or they don't, properly record the events, which can lead to unfortunate circumstances upon audit.
Mm-hmm. You talked about upon audit. What's the first thing in your experience when the agent walks into a club? What are the two things that agent always asks for?
They always ask for the non-member book and the checklists that back up the events that are in that book and whether they are member or non-member.
And what are some of the criteria that would make it a member revenue function compared to a non-member
Right.
revenue
So a member
function?
a member has to have a direct business or social relationship to the event. So it has to, if a member works for a company who's having an event at the club, that would be a direct business relationship to the event. And a social event is if the member's daughter had a wedding at the club, and that would be a direct social aspect.
As long as that member isn't reimbursed. And
Correct.
most people I know that have
Correct.
weddings for their daughters don't charge the guests.
Right. So if a member's neighbor, he had a wedding at the club for, his neighbor's daughter, then in being reimbursed for the amount of the wedding, that would be non-member. There's also another thing that clubs miss a lot is the reciprocal income. So if they have a reciprocal with clubs down the road and they have members from another club come in and use their club, that's non-member income.
Reciprocal revenue, what is that to begin with? How would you define reciprocal revenue at a club?
That would just be if a member from another club, sometimes clubs have reciprocal arrangements with clubs in the area. So if their club ever closes down, the members from that club can go use another club or vice versa.
But the other part of it too, from a reciprocal standpoint, city clubs are famous for having hundreds and sometimes thousands of reciprocal clubs. So when you're traveling around the country, particularly if you're staying in Chicago and there's no hotel rooms available, well, the Chicago club, City Club of Chicago, has hundreds of overnight guest rooms. And with a letter of introduction in advance, you can stay there, and that would be viewed as reciprocal income.
That's a very good point. And a lot of the clubs that we do pick up don't realize that reciprocal income is non-member.
Some other situations at private clubs. Why is it so important to maintain tax-exempt status for a private club? Because most clubs, even if they were in a taxable situation, they're not making money anyway. So what in your mind are some of the biggest reasons to maintain tax-exempt status? One that comes to mind is Section 512 of the Internal Revenue Code. If a club were to sell some property that it owned, for
Yeah, that's a
example.
very good point. If a club, sells property within the club premises, there is, under Section 512, they can exclude that gain from income tax as long as they reinvest those proceeds within a certain period of time into additional assets within the club. So that's a great area of the code that they can take advantage of under being a tax-exempt club.
One of the things that's very important in the private club industry in the last several years is benchmarking. We've been forever long fans of benchmarking a club against themselves, meaning not only look at the revenue from this year compared to last year's, but let's look at a 5 years detail of where that information is coming from, and then compare it with a filtering system to other country clubs in the Northeast that are over $5 million of revenue.
And the reports that it spits out are very valuable to the clubs. Then we take them to, our board meetings,
What's been your
finance committee meetings.
experience when you roll that out in front of a board or finance committee
Right,
meeting
they
of
can't
our
wait
clients?
to get to that part of the meeting.
Yeah.
The beginning of the meeting is going over the financial statements, which is great. They want to know where they compare to other clubs, their main competitors. They want to know, what other clubs are doing and what percentages they're at. And we can go over each slide and let them know just by using that subscription.
So we talked about benchmarking a club against itself. We talked about club benchmarking. There's something else that is proprietary to PKF O'Connor Davies that I frankly developed a number of years ago, and that's a lot of club statistical information by the distinct club. So the benefit is, with the stats that I have developed, and I'll talk about what I did and why I did it, but you can look at a club directly. You can look at a club's debt level. You can look at a club's debt level compared to your debt level. And with club benchmarking, it's just you against a homogeneous 100 other clubs. The way this started, I was probably 10 years ago and knew I was going into a board meeting and knew that they wanted to spend another $3 million to renovate the golf course. I knew they were already over leveraged. I knew that. In my gut, I knew that. But I also knew that this is a bunch of high-powered business people sitting at the table that I had to prove it to them. They weren't just going to take my word for it. So that's how the club stats that we call it started, and it's grown now to just over 1,000 clubs that we update every 6 months, and can look at one club, the leverage ratio, for example, total debt of the club divided by the total equity of the club, a strong indicator of how healthy the balance sheet is. And by doing that, we can walk into clubs, and it's amazing how captivated the members are, the board members. They want to see how their club compares to the club down the street. They want to see how their club compares to their business partner's club in the next town. It's fascinating, but the biggest part is it allows, at the next board meeting, allows that group to focus on the areas they should, rather than without this information. It really is the bully and with the loudest voice in the boardroom is the one that's driving the conversation. So at least it says, hey, we're doing well in these categories. Here's where we need to focus. We don't need to focus on food and beverage costs. We got that down. We're right at the industry norm. So that's been very...
And all the information on this report we take right off GuideStar, so it's all public information. So we can go into a boardroom and present clubs that aren't clients of ours. It's all information. It's all public on GuideStar.
The benefit is we can compare your club directly to a particular club or a group of particular clubs. That's been very helpful. Thanks for being with us today. We look forward to continuing the conversation. Our time is up. I thank you for yours.